Let's test our mic and video. Testing audio and video, standing by. Testing audio and video, stand by. Stand by. Testing video and audio. The stock in question is Tesla. Many day trader friends of mine and stock market analysts will shorter time frame. This is a 3-day, 5-minute time frame. Moving from left to right, price has moved from 258 to 270, approximately $12. $12 is approximately I would say approximately 5%. 5% move is fairly healthy. And in 3 days, what we're trying to analyze is that a price increase that would be sustainable. So what I'm doing here very quickly is I'm analyzing the short-term structure of the stock, and this is where the stock is as of yesterday close, 272. Why don't we look at it on a 5-minute chart and see if we can determine in general what direction the large influential stock of Tesla is doing, to determine if headlines are going to say the stock market is up or down. So we'll go over to the default chart first, which is how it works. Very quickly, you'll notice that we seem to be headed north with Tesla this morning, which is fairly interesting. And I will return to...
We start on Monday, March 3rd.
the 5-day view this time. The 5-day view I use with 5-minute candle. So again, we're moving from 240 to 290. It's a little bit more of a robust move in 5 days. What we're zooming in on is yesterday's or the previous high for this 5-day period. We are evidently through that period. So the first thing we're going to do is say there is no issue with Tesla today, that it has broken through previous resistance and it has traded vertically from about 10 a.m. Well, as you can see, I drew an uptrend earlier in the day. That uptrend is increasing. I might say it's increasing precipitously. Why is it headed in this direction? There's only one reason. Analysts will tell you this is a place of previous volume and interest. So I will double check this on the fly. So for the moment, Tesla, which is a heavy hitter in the stock market, is hanging around despite negative news and negative information in the media about the stocks today. So we're going to be agile. We're going to switch over to the 3-month view because we want to say, how is it that stock is gravitating toward that price point? Well, I've already drawn a few charts. The default curves are moving averages, which is the 20-day in blue, the red line, which is beneath the blue, which is not a good thing, which is the shorter term 20-day. So the blue is medium term 50, medium term 50. The red is shorter term. The longer term is still above us. So we are technically in a bearish situation. Why is stock moving to this price today is the question we are looking at. We are curious why is price moving to this situation we find ourselves in. So I look back to this price range and I notice, yes, 1, 2, 3, there were 4 days where price was respected at this channel, not to mention a couple of days this week. So it would bear out that if I added up the volume for these days, it's a price where people want to find value in the stock. There will be as many buyers and sellers. Well, there's going to be a lot of buying and a lot of selling. And if I quickly share the math with you, it's looking like February 26th, 100 million contracts were involved. 100 million contracts again, 100 million contracts again, 100 million. So that's 400 million contracts in this price range in February, and another 100 in the past couple days. So maybe 600 million contracts. So you'll notice price is gravitating toward that price. That's what we're trying to understand in our market analysis. Price is respecting the activity from February 26th through March 3rd. That's considered the fair value of this price. Price gravitates towards averages, and the averages there clearly are convening the blue, the yellow, and the red right in this area. So there's nothing wrong with the stock market according to Tesla. So what we will do is we will compare Tesla with another stock that we like here at Exeter Analytics. It's called Citi. Thanks for joining us. We will be covering a broader set of stocks by using a shortcut, and that involves downloading chart information as tables, dozens at a time, and plotting them in one place using a tool called Powerbi. I do not have positions in Tesla. I do have positions in Citi, and I am not a financial advisor. I am not here to make recommendations. I'm here to teach you about using IT tools and tricks that relate to everyday activities in the financial and financial analysis markets. So I've worked for Fidelity and the government as a financial analyst, and lately I've been using tools that benefit me with my investment decisions, and I hope you'll learn how savvy investors are using data and using data models in Power BI and the cloud. So stock today appears for Citibank to be above the medium term and long-term moving averages, right at the short-term moving average and slightly below. So we are effectively looking at where the price is. And again, it is in a fairly well-populated area. If you'll notice that I look at stocks in terms of a range, I look for a stock that is ranging, and I draw the chart lines here. So you'll notice there's a line at about the $72, $73 mark and down between the 67, 68. That is where the latest range seemed to be before it was getting away from us and way overextended. And if you want to do the math on the millions, we'll say that on or about November of 2024 until January of 2024, there were 9 days with average volume, you'd have to say above 60. So again, 500 million contracts were going, and this is again about the number that we saw previously for the past stock, Tesla. So you'll notice price tends to gravitate towards these averages, and you'll notice those averages are right there between the long term and the medium term and the short term. Long term, medium term, and short term right there. We are a little bit high. It might suggest that Citibank will be going down a little bit. Citibank is affiliated with the banking or financial sector, so we might say there may be a little bit of pullback in this sector of the market, unlike Tesla, who seems to be pushing slightly up. And that's very easy to do with a very simple chart, the 3-year weekly. I'm going to zoom in a lot. I'm not going to use a weekly chart. I'm going to use a daily chart. And the daily chart shows us that the price is seeking a lower position, and we indicated in the 3-year chart that the lower position is closer to where it naturally was trending for several weeks at the very end of last year, slightly below where we are. And We are beneath the long term, we are beneath the medium term, and beneath the lower term. On the 10-day chart. So despite what you're reading in the newspaper, I do not believe we are in a correction. We are still generally trending up for the past couple of weeks. And what happened in the past month, where we saw a spike in prices, was more of a exaggerated move up that's returning to a more normal range, which was still bullish with comparison to the previous months or the autumn of last year. So we got ahead of ourselves for some reason, which is extremely strange and probably driven by short-term speculators, not long-term investors, who we try to track and respect on this channel. Moving right along, we are going to check out another stock in another sector, and that stock, as you'll see here, is the Intel Corporation. Instantly received interest from investors due to the impact of production in America as a policy perspective. The policy perspective indicates that we've relied on semiconductor manufacturing from foreign places, causing issues which involve supply chain and so many intermediary people that the price is probably, again, a little bit high. And Intel should be a stock that gives us a fair value, and a fair value meaning it's not overly hyped, because it was one of the lower performing American manufacturing for semiconductors in the world. It is as fairly priced as it gets. And on the on the weekly 3-year, we are quite in the middle of a very healthy range between $20 and $25, slightly on the high range. And again, the millions of dollars or contracts traded from August through March is very healthy, if not unusually high amount. Unusually high amount means there is an unusual amount of interest in the stock over the past 7 or 8 months. So this is a stock that's poised to go up. It has not had any artificial spikes or accumulation, and there's certainly no fear in this particular stock. It is trading above the short-term moving average, but below the medium-term average, meaning it's probably returning toward a middle-of-the-road range at the 23 price, which is actually where it is today. I believe it could go down to 22.50. And again, there are no clear suffering signs from major companies that I'm looking at on my watch lists yet, which pertain to panic or bearishness. We are towards the top of a range, and Intel over the past 10 days had gone up above that range of the $25 and wasn't able to sustain it. And so regardless of what the media is saying about tariffs and fear, this stock is still poised, peeking its head above normal ranges during these fearful moments, which I think are a far cry from how the market is responding to the so-called fear. Again, how my fellow traders view things on shorter time limits suggests that the stock is respecting a downward trend and not making a very bearish or aggressive move in either direction. Okay, So we've talked about the use of technology shortcuts and the use of Power BI. I'm going to walk you through how this process would look. And the purpose of it is to show you, frankly, how important table data is, or data that's stored behind the scenes, behind the graph. You've seen the graphs, and now I'm going to pull up what amounts to the watch lists feature of Charles Schwab brokerage account. This Charles Schwab brokerage account will allow me to analyze my stocks in a number of ways, or what amounts to portfolios. And I used the symbol sort method, sorting descending order, or alphabetically rather, from A to Z, where special characters are preceding the A. In this case, special characters indicate a index, which is an attempt to capture the entirety of stocks in a specific sector, like the Dow Jones. The Dow Jones Industrial Average, which I, for some reason, have in there twice for emphasis, is followed by the Dow Jones Transportation. Both of them seem to be in a normal, flat, not too high or too low range. The S&P 100, not too flat, not too far up or down. The S&P 500, not too far up or too far down. Volatility seems to be going down, the CBO near term. And so volatility seems to be calming down, Amazon volatility. Apple stock looks about flat, AMD looks like it's a bit down, and so on. So if I wanted to look at dozens of stocks together and compare them, I would use this tabular feature. What's more, if I wanted to compare them with a different watch list or a different point in time, I would save this point in time by exporting. And you'll notice that when one clicks on the export, this data that is presented on the website gets extracted. And the format of extraction is what is known as a comma-separated value file. And a comma-separated value file, it can be opened in a database program or Power BI. So what I'm going to do for you guys very briefly is show you the Power BI. I will show you the Power BI version of that watch list, because it's important for you to understand that you have to visualize it on the web in a way that's comforting to those who use websites. And that's a specific format. You might call it a visual or HTML-based format. However you want to think of it, a web-based format. And what I'm doing for you guys next is quite simple. I am taking a quick snapshot of it so that we can look at it, and then I can show you, well, using this specific tool, I can do a little bit of math on the data, whereas right now when I look at it, that's beyond my capabilities. Something that I see on somebody's website is not something that I can mess around with. I can't mess around with it unless I have access to the back end, and access to the back end is reserved primarily for contractors, as you can imagine. And I won't get into the details of the problems that you would face but most companies are willing to create the application programming interface, the API, which allows you to look at data from their website on a separate web page where you might be able to mess around with it. In fact, those are the common features that you find on mobile apps for your brokerage account. So, as such, what we're doing is saving ourselves a little bit of time and effort to do a very custom view of website data using a third-party tool. And these third-party tools like Power BI give us a bunch of built-in functions that I'm going to share with you now. And I've used the Power BI tool to upload a file that we had previously downloaded. So you had noticed that we had downloaded a file. That file in comma separated values is just a bunch of numbers in rows and columns. And it won't look at all like what it did on the website, because that website formats numbers and creates its own flavor, right? And that flavor is unique to that website. And instead, what we're doing is we're using a third-party tool. So when I open that third-party tool, what you'll find is a layout where you can do math on it. And we've covered that thematically just now. Now I'm going to show you those tips and tricks. Now hang with me just one moment, because I do need to finish importing it into the Power BI, and that won't take too long here. Music, and let's breather as I pull up my own tools. Again, thanks for watching this important video that I'm making to show you how third-party tools can make your analysis of the stock market very simple. Let's stargaze together under cosmic delight. Catch a comet's tail in the magic of the night. The saxophones whispering tender and light. We'll journey through time and no spaces in sight. And for those that are really technically savvy, I'm basically going to give you my own API, right? So I'm going to use a URL that I own, and you may find that as I load that up, I'll just master's degree, which gave me a little bit more, cloud-based or infrastructure as a service domain. And in that domain, I have a series of web pages, and all I do is add content to my public-facing pages, which then I can share with my clients. And while you enjoy yourself listening to the music or watching, videos or getting on your phone and so on, I'm uploading one of these snapshots live, simply because as a stockbroker and financial analyst, this is how we spend our time. We're not really staring at stock prices 24/7. We are doing analysis work, which is very important. And so what I'm doing very quickly is I'm uploading that file that we just saw to my webpage and sharing it with you.
Constellations we explore, floating through the ether, craving more. With each gentle note from the piano's keys, all of rockets higher, carried by a breeze. Oh, darling, let's dance through the galaxies, where rocket ships and love collide with ease. Our hearts will soar on Milky Way streams in this retro dreamscape of celestial themes. Let's stargaze together under cosmic delight. Catch a comet's tail in the magic of the night. With saxophones whispering tender and light.
And now what we'll do is I'll share that information with you. My URL. Music brought to you courtesy of Retro Future Dreams. Retro Future Dreams is a jazz-based AI site that plays pretty chill music. And
hybrid work, by what you may have been told, it's here to stay now, both hybrid and the cat. But fortunately, we can make it easy for you. Introducing the Meeting App that uses patented AI technology to always show you who is talking and actually gets smarter over time. It's easy to use and even easier to customize to perfectly suit your hybrid work needs. The Meeting App, the next best thing to being together.
my live stream window is now being updated so that I can share my tab with you. So we've looked at data, how to extract it, which is simply cut and paste. Now we're going to show you content. So all I'm doing is I'm coming up to one of my web pages and I'm pulling up a web page that I've dedicated to doing things. And
underneath on constellations we explore, floating through the ether, craving more. With each gentle note from the piano's keys, all of rockets higher, carried by a breeze.
All right, so you are now at that page, and that image I am currently editing. And once I'm done editing that, you'll see it live. So I need to double check. I'd like to double check the name of the file, which I am uploading. It is Untitled 2 SMCI. Untitled 2. So now in a moment, when we hit refresh, we'll now have a better view of this we will have a better view.
In this retro dreamscape of celestial beings, let's stargaze together under cosmic blue light.
And what I did is I
Catch a comet's tail in the magic of the night.
changed the file name of the file that I'm sharing with you before I uploaded it. So it's again that two-step process where I have something on my desktop like a CSV, and then I have to post it to my again cloud-based account that we talked about.
As satellites twinkle in the earth, we'll fly through the cosmos, wrapped in love. With the earth's no fading.
That's what we're doing at the present.
Lost in the wind of your sparkling eyes.
So now you're learning what we do behind the scenes when we support the infrastructure of a company. And cloud, so we got to give it a few seconds for it to refresh. And then once we are refreshed,
where rocket ships and love collide beneath.
All right, it's ready to refresh. We should be ready to go. Third time the charm, is that what they say? Okay, so what we're looking at is Power BI. So remember the website and the page that we had? Well, in this particular case, my data is sorted and presented vertically in columns. So CSV data, which is comma separated numbers, then when imported gets presented as a series of rows and columns where you'll notice the symbol, column 1, you'll notice but what's important also to recognize is not only is it human readable, but now I can do some math on it. So the math that I wanted to say is, okay, so I've got a couple of files that I'm looking at from yesterday and today. Okay, I want to know based on that information. Okay, I want to know based on that information which of the stocks are performing at a pretty high level. And all you do is you combine the two charts or the two CSV files. Imagine you've combined them and you run a function that says take yesterday's price from today's and let's compare the values, right? The values will tell me as a percent, okay, what is happening. So I am now taking that data and looking at it and analyzing it, right? So the results are what matter, but I wouldn't be doing all this work like cutting and pasting it onto my website because I don't need to. I can see it on my dashboard. And so since I would see it on my dashboard, I wouldn't be wasting time. I would say, do I need to act on it today? And I have like 4 hours to do that, right? So I would say this information is a good starting point for what I'm intending to do. And since this is a good starting point, well, if I worked for a bank, I certainly am not doing the trading. I'm gathering that information and I'm giving it to an analyst who then uses the information to say, okay, well, I like the health of this stock, or I don't like the health of this stock. So So that's how life is. It sometimes proceeds at this pace. It's not necessarily lightning quick. All right. And I had already run the equations before presenting. I'm already comfortable with the data. I'm just presenting it, right? You can imagine to present data in a normal corporation has its own layer of bureaucracy, and it would take several hours. Not any faster, much slower, in fact, than what we're doing here live. So you're getting a glimpse into what life is like in the work world, and that's important, right? Okay. So I'll go ahead and refresh my page. That's Power BI. I'm doing a little bit of magic behind the scenes. And so I'll go over my findings with you live while you look at the page. I'll read from the page in my Power BI. And I'll tell you, look, I'm sorting the data by biggest percent move. The biggest percent move at the top of the chart is Core 1 Labs. Core 1 Labs is effectively one of the cheaper stocks that I'm following, and it has made a move of, price of $4 to $5. Okay. But since people aren't interested in that, it's not a big player on the stock market. They want to know, what are the bigger stocks doing? The biggest stock among the higher performing ones is called the Ultra Pro Short QQQ. It goes by the stock ticker of S as in Sam, QQQ. And that stock is trading at $35. It was trading at $33. And so overnight, that stock went up. The SQQ is effectively the inverse of the IT ETFs. So right off the bat, okay, and because I did this hours ago, like 2 hours ago, right at the beginning of the day, I noticed, okay, before presenting this, that people are shorting the QQQ, meaning they expect the Qs to go down. We've looked at independently at two stocks, including Citibank and Intel. And we said that Intel is a fairly valued stock. So it is one which we want to watch, because at the end of the day, if people are looking to park their money somewhere, and we've seen that hundreds of millions of contracts were written on it, some of it is going to go into what they believe is a fairly valued price. And the critique has been over and over again that these Qs are shorted because their value is a little inflated and not consistent with the actual trajectory of the underlying market, which is up, but not so dramatically. All right, so aside from that one, the QQQs, which is an important amount of information, because if you know ahead of time that your IT stocks may go down today, you are going to be among the people that withdraw stocks. You're going to keep the profit that you had over the last year, reinvest it when the stock price stabilizes, and that may not be for a couple of days. So we are going to assume that IT generally is not doing okay today. So we'll then proceed down the beaten path of identifying the next one. So we said the SQQ was up. We also see an ETF called the short, ultra shorting the S&P 500. That has gone up a little bit. So I think there is some speculation that, generally speaking, the market was overpriced, and maybe a bit of contraction needs to continue so that buyers can resume their trajectory. But this percent of 2% move up is considerably less than a 3% move. Okay, it's effectively about half of the move. So we'll skip that one because we don't want to promote fear. I will say that NVENT or NVT, XBI, the biotech, gold miners, Take-Two, a game stock, was doing pretty good. And even the semiconductor ETF was doing okay overnight. So in general, IT stocks are probably overpriced and heading down, but there shouldn't be any dramatic things going on today, which is the media was trying to tell us. Now, if you had read the newspaper this morning or talked to your favorite financial analysis person, they would have told you, yeah, look, GDP came out fairly strong, meaning not below where it was expected. I asked him how it relates to inflation. It's equitable. So we're probably not expecting a dramatic move based on the news, right? I think there was some speculation that had unemployment and GDP come out wrong, meaning below expectations and above expectations, there would have been some turbulence. So in advance of the news, I think some stocks were prepared to pause. And that's what we'll look at in the afternoon is what happened at the end of the day. So we looked at stocks going up using this chart. This chart will tell you General Motors crashed overnight. We all know that if you're following the markets. General Motors saying they're the ones that are most influenced by tariffs. The Vistra Corporation, I follow that. It's an energy play that's not doing so hot. NVIDIA didn't do good overnight either. And there you go. There you have it, folks. That is that effectively is it. I'm going to take a water break. Be right back.
Dreams of rockets soaring high, retro vision set to fly. Stars and comets shift my sight, neon lights on distant shores, hovered cars and ride through doors, futuristic tales in store, cosmic dreams forevermore. Flying through the galaxy, timeless voyage feels so free. When the past is what's to be, in this astral harmony, gliding through the galaxy, timeless voyage feels so free. Blend the past with what's to be, in this astral harmony, spaceships casting shadows. Midnight strolls in the Rubicon, retro futures leave their mark. Echoes of the starry smoke, floating cities gleam ahead, dreams of light now left for dead. Universal path to tread, on this journey souls are fed. Gliding through the galaxy, timeless voyage feels so free. Let the past with what's to be, in this astral harmony. Gazing at the night sky bright, dreams of rockets soaring high, retro vision set to fly. Stars and comets shift my sight, neon lights on distant shores, hovered cars and glide through doors, futuristic tales in store, cosmic dreams forevermore. Gliding through the galaxy, timeless voyage feels so free. When the past is what's to be, in this astral harmony, gliding through the galaxy, casting shadows dark. Midnight strolls in the park. Retro futures leave their mark. Echoes of the starry floating cities gleam ahead. Dreams of light now left for dead.
So, just to recap, let's go back and look at the live chart and say, based on our analysis in the morning, how is that analysis playing out? And I think it's fair to say that that's a logical next step. And without further ado, let's do that. And
dreams of rockets soaring high. Retro vision set to fly. Stars and comets shift my sight.
so this time we go to the raw data because it's easier to look at the Qs. If we were saying the SQQ was what was being shorted, all right, well, if that's the case, we should be able to look at the Qs, which is, the IT stuff. The IT stuff was being shorted, and sometimes, out of a strange news activity, the actual stock price could reverse. We might see something that we may see something that we may see something that has changed, because that's the reality of life. I mean, you just don't know when news is going to break. So the Qs is what I'm looking at. I briefly glanced at it. Okay, and it looks red. That's to say, a red candle, meaning on the daily, it looks like it's a little lower than where it was at the beginning of the day. On this chart, you're seeing 10 days. So again, from left to right, the range of stock generally was going up a little bit, where today the stock opened around Today, the stock opened around 480, and it's trading a couple bucks above it. So, in theory, this idea of people shorting the Qs overnight is a reflection of where the stock was yesterday. So, yesterday at 9:40 in the morning, the stock was considerably higher at 492. So between 492 and today's morning price, 492 to 482, that's $10. That's almost 1%. If my math is correct, that is a considerable drop, and that's why you were seeing a drop, probably stimulated fears of a more larger drop. What we're seeing is indications that the IT segment as a whole is generally weak, or generally, again, returning to what amounts to a fair value range, or a range where the stock was trading previously. And people use fair value their own way. They sometimes capture it as a gap between like where the price was 1 week ago and where it is this week. So, and I may not even be quoting that right, but the fact is we're using volume and price to say, okay, Yeah, IT's returning to a more normal place from that extreme high of yesterday. So it's a fake out. I think the stocks are kind of suggesting that they want to influence policy. This is always the case if you're a financial analyst. It's always the case that around FMO meetings and around, quarterly results, stocks will go up or down to tell you, if it weren't for you guys in the news or for you guys making policy decisions, we would be way up here. Where in fact all they're doing is inflating or puffing the price and then returning it to a fair value. So what is IT doing? Well, for those analysts who understood ranges, they knew that you were a little too high and decided, I'm going to short stocks in accordance with where the fair value is. So today it would stand to reason that it will go down, because if we look at the chart and look at the volume and the price range, on the low end, you're at 474. On the high range, you're at 484. So the appropriate range is 484, 474. Divide it by 2 with maybe a trend upwards. I'd say the fair value price is right there between 474 and 484, but on the top half. So add 5 to 474, 479, 485. That's 5. Subtract 2.5 or 25% of that wedge. I think the price is probably looking to go to 482.50. And 42.50 is not a bad price, a little lower than where it is today. And where it is now, I mean, I'm not saying you're going to get there today. You're at 483.45. I would think it's got some room to go down. And if I look at 482.50, it's about where the stock opened today. So, yeah, were people over bearish? Yeah, that's what you have to do as an analyst. Too many people are shorting the IT sector today. If a lot of people short the IT sector today, and people are like analysts at a bank are looking at this, they're going to tell their savvy investors to maybe slow down your investment in the price today, and maybe in advance of this freedom tariff thing, you could say it's probably best to get out and wait to see if price drops below 475. So yes, a very conservative investor is getting the hell out of IT today. That's all we have time for right now, because that's enough drama to keep anybody's focus on IT and, forget about the SPY, forget about everything else, because that's not what people are worried about. People are worried about the 500 million contracts. That's $500 million. You may as well say everybody on the planet is investing in IT. Everyone's 401k is investing. Stand by.